Hi everyone, my name is Vandana Bhatt V. Today we are discussing everything people should know about life insurance, retirement, and annuities. We are trying to demystify a topic that often feels heavy, but is actually secret to peace of mind, building a financial freedom, and that lasts. I'm joined by Fredo Garcia to talk about how we protect our today's and tomorrow, secure our tomorrow. Fredo is the director of business development at Simplicity Los Angeles. Fredo moved to Southern California in 1997 from Dallas, Texas, and started his financial planner insurance journey with Fortis Investors in Huntington Beach, where he mainly sold mutual funds to clients with some life insurance in the mix. After 5 years with them, he moved on to Guardian, where he only sold VULs, and then he left for the business in 2008. Fredo spent the next 10 years building and training sales teams for startup companies throughout San Diego. In 2018, the president of Total Financial, now Simplicity Los Angeles, asked him to join the team as Director of Business Development. In his role today, Fredo recruits, trains, and helps build independent life agents businesses throughout the country while offering concierge support for case design, illustrations, quotes, and marketing. He enjoys his time with his agents and have very close relationship with them as they work together to become better. Thank you so much, Fredo. I'm really happy and excited to have you here, and thank you so much for your time. Tell
Thank
me,
you,
how
V.
are you
Thank
doing
you.
today?
Thank you. Doing well, and thank you for having me on here. I'm excited to talk about life insurance and annuities, and hopefully we can help some people out.
Yes, yes, that's great. I have some questions lined up for you. I hope you're
All
ready to
right,
answer them.
bring them on. Let's go.
Okay, my first question to you would be, many see life insurance as just another bill to pay. Why is life insurance actually a foundation for wealth rather than just an expense?
Well, life insurance is the foundation that protects a family financially during the most difficult time in their lives. When done properly, it provides the financial building blocks and stability for the family by providing peace of mind, knowing their financial lives are secure. So, most people view life insurance like car insurance. You pay for it and hope you never use it. Life insurance as a wealth foundation works differently, particularly with permanent policies. With the permanent policies such as your ULs, IULs, VULs, whole life, um, you have liquidity. So certain policies build that cash value that you can borrow against to invest in other assets like real estate, your first home, whatever, essentially acting as your own bank. There's also the tax efficiency within a permanent policy. The death benefit is generally passed to the heirs tax-free, and the growth within that policy is often tax deferred or tax-free. And finally, there's their asset protection. Something I learned not too long ago, which I didn't know, that in many jurisdictions, the value within a life insurance policy is protected from creditors and lawsuits. So you have that protection.
Wow,
Hopefully, you never have to go through a lawsuit,
of
but it's good to
course.
know that it is protected.
That's awesome value, the information you just gave. A lot of people are worried about taxes, of course, because people make money and then, they are worried IRS catching on to them and then, they have to pay more than half of their income in taxes. So this is what you're suggesting they should do.
Absolutely. Absolutely. It's great for tax deferred growth. And then of course, if the unfortunate event happens, if you pass away, your heirs do get that money tax free. So it does not hurt
Yes.
them, on the tax side.
Thank you for that. Exactly. I often tell my commercial clients that life insurance is the only asset that creates an immediate estate the moment the first premium is paid. It's not only an expense, it's about leveraging dollars to create a legacy that would take decades to leave, save
Absolutely.
annually, actually.
That's a great thing to
Okay.
tell. Yes.
Yes, yes. So now let's talk about the industry is full of jargon. We hear terms like term insurance, whole life, annuities. In layman's terms, what is the simplest way to distinguish between protection for today and income for tomorrow?
Okay, well, I'll start off with saying that today's financial products are incredibly flexible when they're designed properly for the client's needs. Life insurance provides the financial protection for today with its lump sum tax advantage death benefit. Again, when designed properly, certain cash value life insurance can provide income opportunities for the future. Annuities have the unique ability for guaranteed income for tomorrow. And with many ways to design a life policy or an annuity, it's imperative that you work with a trusted financial professional, such as yourself and whoever else that is listening, to help guide you to the right solutions to fit the needs. So, again, let's go an analogy. Think of it like renting versus owning a home.
Mm-hmm.
Protection for today, that's your term life. So
Mm-hmm.
this is renting coverage. You pay a low premium for a set period, 10, 15, 20, 30 years.
Mm-hmm.
And then if you die, your family is safe. If that term ends, the lease is up and you have nothing left. Income for tomorrow, that's your whole life, your ULs, IULs, annuities. This is owning. You are building equity. So let's say whole life provides a permanent safety net with a savings component.
Mm-hmm.
Annuities are a contract with an insurance company where you give them a lump sum of periodic payments in exchange for a guaranteed stream of income later in life.
That's wonderful. Thank you for that answer. I love that distinction. I simplify it to my clients as if you live too long, you need an annuity. If you die too soon, you need life insurance. It's about
Exactly.
covering the risk of time either way, right?
Yes, yes. And it's really good. Life insurance and annuities is very good for legacy planning, estate protection, so it's a phenomenal vehicle, to avoid taxes, to help your estate, to pass on to your heirs. So, you can't go wrong.
Of course, I would like to leave something for my children for sure.
Wouldn't we all?
Uh, let's throw a hypothetical situation based on your 20 years of business experience. Fixed annuities, can you explain to the audience what actually happens to my money if the S&P 500 drops 20%? Walk us through the math if you can.
Um, yeah. So there's an old saying of having your cake and eating it too. So with the fixed annuities, they're very powerful financial tools that can give clients access to potential upside opportunities while mitigating that downside risk. Depending on the need, these are very good products that can provide security and potential upside for your premium dollar. So your FIAs or your fixed index annuities
Mm-hmm.
are the middle ground for the risk averse.
Mm-hmm.
They use a mechanism called indexing.
Mm-hmm.
This is a beautiful thing about
Wow.
indexing.
Mm-hmm.
You have a floor and you have a ceiling.
Mm-hmm.
So your floor is your principal that is protected. So if the S&P drops 10, 15, 20%, your account stays at 0%. So you lose nothing. Zero is your hero, as they say in the industry.
Wow. Mm-hmm.
The ceiling, though, in exchange for that protection, you don't get all of the market's gains. You might get a cap. So let's say the S&P goes up 10, 15, 20%. Well, your cap is 10%. So
Mm-hmm.
that's the exchange that you take. So that result is, you participate in the market's ups, but you're shielded from the downs, making it a popular choice for those nearing retirement who cannot afford a market crash.
Wow. That's amazing. Something good to know. Since I work with a lot of hotel and business owners, how does a key person insurance policy differ from personal wealth building we just discussed?
Um, a key person policy typically is going to be a term policy,
Mm-hmm.
for an extended amount, again, 10, 15, 20 years, however long,
Okay.
you're going to be there.
Okay.
You want to have that key person protection,
Mm-hmm.
should they leave, uh, should they die while they're in business. So
Mm-hmm.
the amount that they have in that term would go towards the business,
Mm-hmm.
or for what they were participating or what they were um, providing to the business. So
Okay.
that loss of income generation, at their death is now covered by that term policy that you took out on a key person.
Mm-hmm.
Also, key person policies are very good for keeping your upper level executives.
Mm-hmm.
They have that security should anything happen. It's a good way to reward them and
Mm-hmm.
to keep them in the business. And typically it's going to be with a term policy.
Wow. So term policies are best for business key person policy. Good answer.
Yes, yes. It's
Okay.
yeah, again, it's relatively inexpensive. And it's something that should they leave or should they die, that
Yeah.
money goes to the beneficiary, which would probably be the company.
Company. Yes,
Um,
of course.
yeah. So
Okay. People often wait for a perfect time. Where is the starting line? At what age or life milestone should someone stop thinking about these and actually start acting?
Well, the thinking should stop the moment someone else depends on your income. So you have milestones. You have marriage, you have buying a home, you have having a child, saving for college. All these are your traditional triggers. Um, however, the quick, easy answer, the best time to act is now,
Yes.
regardless of age.
Mhm.
Insurance is based on age and health. On every year you wait, the cost of waiting increases the premium and reduces the time your money has to compound. So act now.
That's the powerful point. I agree with you completely. Let's talk about retirement. The
Ooh.
days of the gold watch and company pensions are mostly gone. Many people are no longer have company pensions. How do annuities act as personal pension in 2026?
Excuse me. Um, Two words: guaranteed income.
Mhm.
Uh, Pensions were an amazing benefit that many companies provided for their employees back in the day. There are so few of those now. Many have gone to the defined contribution models, with your 401ks and
Mhm.
where the employee sets aside their own money,
Mhm.
sometimes with that company match.
Mhm.
And that grows tax deferred. Today's annuities can provide the opportunity for some upside potential and guaranteed income. There's that two
Mhm.
words, guaranteed income. Each situation is different and unique. It's truly not a one size fits all. And again, working with a professional can help your clients weed through these choices. So in 2006, the gold watch retirement with a guaranteed company check is nearly extinct. Annuities fill this gap by allowing you to create your own defined benefit plan. So you contribute post-tax or pre-tax dollars into an annuity. The
Mhm.
insurance company assumes the longevity risk. That's the risk that you might outlive your money, as you mentioned earlier. They provide a contractually guaranteed check every month for as long as you live,
Mhm.
effectively recreating the pension plan your grandfather had.
Of course. So you would call that as self-funded retirement.
Yes, absolutely.
Okay, that sounds really awesome. Let's talk about the stock market. The stock market can be a roller coaster that keeps people up at night. For those nervous about the stock market, how do certain products like fixed indexed annuities protect the principal while still allowing for growth? I think we discussed that earlier as well.
We did.
But yeah,
I'm going to sound like a broken record. I'm going to go
yeah,
just right back to those fixed
yeah.
index annuities. You have
But
that
yeah, a
index
lot of
with the
people,
floor.
are stressed about this. Last time in 2008, when the crash happened, a lot of people lost their income. And, a lot of people committed suicide because they were not sure how they would be protected. So this is very important question, I would say.
Yeah, it's that's why you mentioned at the very beginning, that's why I
Mhm.
left in 2008 because that was the
Mhm.
big crash. And
Mhm.
at that time, I was mainly focused on the mutual funds and not so much on the life insurance side. And
Mhm.
unfortunately, a lot of people took a hit and a lot of people unfortunately took their lives as well too.
Yes.
If I focused more on life insurance at that time, knowing the power of indexing with the floor and the ceiling, that
Mhm.
money would have been protected.
Mhm.
It wouldn't all have been in a mutual fund and see all that principal just disappear because of the crash.
Mhm.
So that is protected with, a fixed index annuities. It's with life insurance again, because you have the beautiful power of that floor and ceiling, zero to hero, but you also, pay for that protection by having that cap at a certain percentage so you don't take full advantage of the market gains, but you at least get something out of the market gains. So
That's excellent. It's like sleep well at night, swan strategy for conservative investors,
Yes,
I would say.
exactly. Exactly. You sleep a lot better when the market drops 20% and you lose nothing.
I know my
So
husband keeps checking his portfolio on his phone and saying that today this happened, it's gone down, it's gone up. So
I do
there
the
is
same.
something
I do
that
the
is
same.
protected.
I do
Yeah,
the
that's
same.
good to know. Let's talk about the things not on the brochure, the hidden benefit beyond just a monthly check. What is the one benefit of annuities that most people completely overlook? Example, long-term care riders, maybe?
You hit it right on the head. That is one of the biggest benefits that people overlook or just aren't aware of. Some are even built
Hmm.
in into life insurance policies or annuities, and that is your living benefit of long-term care or critical illness. One of those chronic illnesses, but mainly the long-term care. Modern annuities and life insurance products, they include those riders that allow you to access that
Hmm.
death benefit or account value while you're still alive if you're
Hmm.
diagnosed with a chronic illness or if you need nursing care. So
Hmm.
this prevents a medical crisis from wiping out your entire family savings. But it's important to remember these riders, if you have to tap into them, into that long-term care, let's
Hmm.
say you use $100,000 for your long-term care and your death benefit is 500,000. Well, now your death benefit is 400,000. So
Hmm.
you're losing you're
Of
using
course.
that, you're taking away from the death benefit. But
Yeah.
again, you're protecting yourself from any medical crisis from completely wiping you out financially.
Yeah, that's true. We would say that it's a dual purpose tool that prevents your medical bills from eating your children's inheritance.
Exactly. Well said. Said it better than
Thank you.
I could.
Thank you for answering my questions. I have another one for you.
Uh-oh.
Financial planning can feel overwhelming. The 30 seconds rule, if someone can only do one thing this week to improve their financial security, what should it be?
Well, outside of buying life insurance or an annuity, which you should be doing, um, is something that I've come across a lot lately is for those that already have life and that have made that smart decision to get life insurance or annuities, is to review your beneficiaries.
Hmm.
There's life changes. You get married, there's births, there's deaths. But many people still have an ex-spouse or a deceased relative listed on their accounts as their beneficiary. So ensuring your contractual finish line needs to be aligned with your current life. Takes seconds to review, but it saves years of legal headaches for your loved ones. So 30-second rule, buy life insurance, get an annuity. And if you've already done that, make sure you review your beneficiaries. And
Yeah.
also, when these big life events happen, such as a marriage or a divorce, um, do a policy review.
Hmm.
Make sure that you have everyone covered properly. Make sure that those that are no longer with you aren't covered.
Of
And
course.
it just saves you. It just saves a lot of legal headaches down the road. So just keep updating every year, every other year, or when a major life event happens.
Great advice. Thank you so much for that. I always say a plan on a napkin is better than a perfect plan that stays in your head, right?
This is good grief. You're saying these things so much better than I am.
I would say I prepared a little this time.
Gosh, wow. I'm impressed.
Okay. Can you tell us a story of a time you saw a policy or annuity actually change a family's life? Something you've experienced in your career.
Um, it's one of the it's unfortunate. People die, and that's why they buy life insurance because they want to protect those that they love. There was this lady, she must have been in her mid 60s, late 60s, and her husband died.
Mm-hmm.
And she was married very young, I think in her 20s, and was with the same man this whole time.
Mm-hmm.
So she was very well taken care of. So well taken care of that she didn't know how to do a lot of things. She didn't even know how to write a check. The husband took care of everything for her. So when he passed away, she was just lost. She called the office because she didn't know who the life insurance agent was. So she called our office, and the president of the company and myself worked with her on how to go forward, how to file the death claim,
Mm-hmm.
and everything that's involved with that. And the check came to us, and we drove up to Santa Barbara from Los Angeles and hand delivered her the check.
Wow.
She was very apologetic. She was very thankful, and she took us out to a lovely lunch.
Hmm.
And she just couldn't believe. She made a comment. She goes, "My husband took care of me all my life that I know of while he was alive, and I can't believe how well he's taking care of me in his death." So,
Yeah.
that was really powerful to hear her say that. But, that's the good thing that comes out of life insurance
Hmm.
in a very bad situation, when someone is gone.
Yeah, that's very powerful. You're right.
Yeah. Yeah.
Thank you so much. All the information you've given us today has been really eye-opening. What I'm taking away from today is that whether we are talking about life insurance for protection or annuities for personal pension, it's all about certainty and building wealth that you can choose to live with or leave it for your loved ones.
Yes.
In my 19 years of operations and in business, I've learned that you can build a massive future on a shaky foundation.
This is true.
These tools are those foundations, I would say. Thank you so much for adding up to it and being a mentor that you've been for me. I am really grateful. You've been there. I can vouch for that. That whenever I need your support, even if I mess up, like I mess up, you are there, and I'm really really grateful for that. You will be in my memory lane forever. Thank you.
Thank you so much. Thank you so much, B. You had some great, great questions, very good questions, and
Thank you.
I hope we're able to enlighten some people out there that are going to be able to see this and hear this.
So, Fredo, thank you so much for joining from Simplicity LA. And to our audience, remember your legacy is built by the decisions you make today. I am Vandana Bhatt, and we will see you on the next session. Stay protected and keep growing. Fredo, if you would like to share your information here for people, if they would like to connect with you or future
Absolutely.
insurance agents like myself who are just
Absolutely. I'm
jumping
more
in
than
the
happy.
industry, maybe you can train them too in the future.
Absolutely. I love what I do, and I love working with agents such as yourself. So if there's anyone out there that needs help or needs some guidance, needs a brokerage general agency to be under, my name is Fredo Garcia, Director of Business Development at Simplicity Los Angeles. Best way to reach me is my cell phone, and that number is 310-721-4517. I am quite responsive, so feel free to give me a call, as V knows.
Yes.
I'll take your calls, on a weekend. Hopefully not too many, but more than happy to help. And I look forward to working with you more, V, and with anyone else out there that needs some help.
Thank you. I'm sure after this interview, we are receiving a lot of calls, and I'm coming to you for the
Excellent.
advice
I like to hear
again.
that.
Thank you, and have a good day. Bye bye.
Thank you. You
Take care.
too.
Bye.
Bye.